You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 3rd day of January, 2025. Sorry for the late start. Sometimes life happens. But thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial yet, when Michael comes on in a bit, he'll walk you through step by step exactly how to do it. And then you can do it. We'll get you indicators indicating today. You'll have the weekend to get familiar with them. And then you've got all of next week, 5 consecutive trading days. So, since we're running late, let's just dive right into our daily devotional. The topic, we're in day 11 of 12. Strengthening your faith with the heavenly gifts, or the gifts of the Spirit. Today's scripture, Mark 16, verses 17 through 18. These are some of the signs that will accompany believers. They will throw out demons in my name. They will speak in new tongues. They will take snakes in their hands. They will drink poison and not be hurt. They will lay hands on the sick and make them well. Mark 16, verses 17 through 18. That's the Message translation. So, today we talk about asking for the gift of tongues. Often in the life of faith, we do not know what to ask for or how to pray. The heart is full of emotions, but the words seem lacking. In these moments, we can remember the promise that the Holy Spirit intercedes for us with groans too deep for words. In other words, even when we can't express what we feel, the Spirit takes our place and prays for us. Don't be afraid if you feel overwhelmed or confused. The Spirit knows your heart and what you need. You can ask God for the gift of tongues, a spiritual language that allows you to pray more deeply and directly without the filter of your mind or human words. When you pray in tongues, you connect with God in a way that goes beyond human understanding. The Spirit guides your prayer, expressing what you can't say with words. If you want to receive this gift, you can ask in faith. God will never leave you unanswered. His will is for you to be fully connected to Him without limit. Let's pray. Heavenly Father, thank you for the promises you give to those who believe in you. Strengthen our faith to walk boldly in your power, trusting in the signs that follow. Help us to speak with authority, overcome evil, and bring healing to those in need. May our lives reflect your glory, and may we faithfully proclaim your name in all that we do. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Friday. Everybody's been working for the weekend. And here it is. Your prayers have been answered. We all live to see another Friday. Let me give you the numbers from around the world. Starting in the U.S. with the cash markets or the indices. Currently the Dow's up 269 points. The Nasdaq's up 267. Now for the Nasdaq, that's almost 1.5%. S&P 500 is up 62 points, a little over 1%. And the Russell 2000 is up 22 points, again a little over 1%. In the Asian markets at the close, the Nikkei fell 386 points, 1%. Shanghai dropped 51, 1.5%. And the Hang Seng gained 136 points. In the European markets, the FTSE fell 36, the DAX down 118, the CAC down 111, and for the CAC, that's a loss of 1.5%. So we had a mixed day in Asia. It was a red day for the UK, and so far, it's a big green Radio Friday here in the US of A. So let's take a look at the news. Workers in a limestone quarry in southern England have uncovered almost 200 dinosaur footprints dating to roughly 166 million years ago. Happy New Year to you, Kevin. The tracks are in the vicinity of a similar, previously discovered, but now inaccessible site found in 1997, leading paleontologists to describe the area as a dinosaur highway. The recent find includes imprints from at least 5 different animals, believed to be 4 large sauropods and 1 megalosaurus, the latter a nearly 30-foot long carnivore. It was the first dinosaur fossil ever to be formally described in 1824. The new discovery sheds light on the behavior of dinosaurs in the region dating to the Middle Jurassic period, at a time when what is now England had a tropical climate and was covered in warm, shallow seas in many areas. Unlike the previous 1997 discovery, researchers were able to extend extensively images and create 3D reconstructions of the prints, potentially providing insight into how the animals walked and interacted. Let's go to the market news. Since the election, Elon Musk has spent weeks cozying up to President-elect Donald Trump, and speculation has run rampant on what the relationship could do for Musk's businesses. For starters, there are at least 20 ongoing federal investigations into his companies, according to Reuters, and the thinking is that those could see relief once Trump takes office. All that speculation, though, is about the future. In the present, well, okay, now past if we're quibbling, Tesla said it sold fewer cars than analysts predicted in the fourth quarter, posting its first year-over-year decline in deliveries in more than a decade. The automaker's stock fell 6% on the news, putting the stock down 18% since its last local high around Christmas, though it's still up over 50% since the election. The U.S. Surgeon General is putting the big foot on alcohol. Alcohol products like beer and wine should carry warnings of their links to cancer, according to the U.S. Surgeon General, citing an increased risk of developing tumors in the breast and other parts of the body. So those warnings that you see on packages of cigarettes today, I guess they're soon going to be on your favorite beverage, alcohol-wise. From Bloomberg, a U.S. factory measure improved for a second month in December as orders and production picked up, suggesting the cloud over manufacturing may be starting to lift. The Institute for Supply Management's manufacturing gauge rose almost a point to 49.3, the highest level since March, according to data that was released just this morning. While still below 50 and indicating activity continues to shrink, the index was firmer than all but one estimate in a Bloomberg survey of economists. Oil extended a rally that has brought it to the highest in more than 2 months as shrinking U.S. crude stockpiles and a risk-on tone in broader markets overshadowed signs of a misfiring Chinese economy. Wells Fargo has named their competitor, Citi, as in Citigroup, from Reuters, saying that their stock could double in value over the next 3 years as the Wall Street lender's profits surge. Wells Fargo analysts wrote in a client note on Friday, naming it the brokerage's top pick in the large cap banking sector. That's a little unusual. More from Bloomberg, the Federal Reserve Bank of Richmond President Tom Barkin said he believes the central bank's current level of interest rates remains restrictive enough to lower inflation in 2025. Barkin voted in favor of a quarter-point reduction in the benchmark lending rates on December 18th. He rotated out of a voting position on the Fed's interest rate panel this year. The Fed's interest rate setting panel has pushed the federal funds rate down 100 basis points to 4.3%, Barkin said Friday, in prepared remarks to the Maryland Bankers Association. Inflation is not yet back to target, so we still have more work to do, but we don't think we need to be nearly as restrictive as we once were to finish the job. Fannie and Freddie, the agencies that control mortgage giants, Fannie Mae and Freddie Mac, set out a roadmap for releasing the pair from government supervision, sending the entity's common stock to the highest levels since 2019. The new guidelines, released yesterday, reinstate the U.S. Treasury's power to approve any such plan in a bid to keep the process orderly. I think we're going to see a lot happening with the Fed once this inauguration gets done, when it gets done. U.S. stocks climbed today, led by technology giants, suggesting Wall Street stocks may finally halt a 5-day losing streak. That's the longest since April. So with that, let's go to the local news. Logic 247. It's our 24/7 around-the-clock Emini alert service. Over the last 335 weeks, we've issued over 18,700 individual handcrafted alerts. This week being a holiday week, not a lot of alerts. Typically we have at least 50, sometimes 75. There have been weeks where we had 100, but this week there was just 30, and we're still waiting on the outcome of 5. Valerie did the recap this morning at 7:30 a.m. Eastern, and I've not posted any additional alerts today. Of the 25 actionable alerts, 5 were stopped out. That would be 20%. And what we've averaged over the last 335 weeks and 18,700 alerts, that has been our average, 20% on a weekly basis. We've had weeks as low as 3%, 5%. I think the highest week we ever had was 24%, if memory serves me correct. That's a long time, 335 weeks, so forgive me if my memory's not what it once was. Now, the logic alerts are designed to teach you how to read the chart, how to spot potential resistance, potential support, and find the windows of opportunity in between the two. Yes, you can trade them, but make sure that you use them for the purpose intended. Because if you want to trade, you got to learn how to read the chart. You need to be able to look at a chart and know with a great deal of certainty what the next high probability move is. Whether it's futures or stocks or crypto or Forex or ETFs, price flows the same across all markets and all time frames. Our original alert service, the Concierge Trade Alerts, or CTAs, they're a bit different. They don't come out around the clock like the logic alerts. Logic alerts can come out at 2 a.m. or 2 p.m. as opportunity presents. Futures trade around the clock. We have traders around the globe. And their day session is our night session, and vice versa. But the CTAs are different, primarily in that they're posted as a static report each and every day, shortly after the Globex open. Last night I got them out 5 minutes ahead of the open. So as we go to the charts, keep in mind that all of our members and trial members had these targets 5 minutes before the market opened last night. The ES, that's the S&P 500 Emini, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. Published last night at 5:55 p.m. On the days that I'm going to post them ahead of the open, I'll always put a note in the discussion group that alerts you to the fact so that you can be ready at the open if you want to get your goal for the day sooner than later. And that brings us to the daily chart, where, as we can see, we had 1, 2, 3, 4 down days, and now we've got a green candle. I guess in that article they were counting this as a down day as well. It did close red. Up at the top, right up under that trend line. So 1, 2, 3, 4, 5. And then yesterday we talked about this. This area right here, where the step line crossed red and falling, turning it to blue and climbing. We had mentioned in a workshop a few weeks back that price would probably find support at this area right here. And in fact, it did the following day. Yesterday, we came very close to that area. Remember, we talked about being on guard for this as potential support. And it was, as buyers came in early before this previous low. And we've now pushed price up to an area that should provide some pretty good resistance. We're at red and falling and the step line. If we can overcome that, then the next major resistance is here at the 24% fib extension. Then above that, we've got the BBC, which is roughly right at the high of December 30th. Then after the BBC, we're at the 38% fib extension. And then we're at these highs right here. The high of December 27th and the high of December 24th. Now if we can clear this trend line and clear the 62% fib extension, then we start dealing with these highs as potential resistance. And that right there is the all-time historic high. Now I recommend, whether you trade futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart. See what the deep pockets are up to. Institutional traders, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. They have account size in the hundreds of millions, billions, and in some cases even trillions of dollars. So they can stay in a drawdown far longer than you or I would be able to, and they can stay with a profitable position far longer than you or I could be comfortable with. So, get a free look over the shoulder. Remember, especially with futures, they trade overnight. Stocks, you can't see what's happening overnight because the stock exchange closes in the US at 4 p.m. Eastern. But once the Asian markets open, they're trading the same stocks we trade. And then 3 a.m. Eastern, you've got the European open. They're trading the same stocks, which is why almost every day on almost every stock, you'll see a gap, either a gap up or a gap down. That's a reflection of what happened overnight overseas. Futures, though, because they trade around the clock, you don't see those kind of gaps. See where we closed yesterday? We opened basically right at the same spot. Yesterday's close was 58.49 and a quarter, and then the open 1 hour later was 59.21. So we had a close at 59.20 and an open at 59.21. 1 point. Not much in the grand scheme of things, but it's been bullish all the way up to this area of resistance. Now, not only are we dealing with the step line and red and falling as potential resistance, but yesterday's high was 59.95 and a quarter. So by spending 2 minutes with the daily chart of whatever you trade, not only are you getting a look at what the deep pockets are doing, but you're able to identify where major resistance and major support are. And it's free. All alerts are created on the 30-minute chart. These are the weekly trading zones that were published Monday morning at 6:15 a.m. Eastern. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. Here we overshot the zone, and then we dropped and found support. That bounced us up to resistance. And then if you scroll left, you'll find why the market stopped dropping here based on market structure. Once the step line crosses to the right side of red and falling, we anticipate a retracement to the BBC. And when you have this much blue and climbing on the way to the BVC, quite often that's a signal that price is going to trade through. Now the pullback to the BVC holds more often than not, whether it's pulling down from above or pulling up from below. But eventually we know it will trade through. So this was the vertical lines separate today, Friday, Thursday. Back over here would be Tuesday because the markets weren't open on Wednesday. This was the 6 p.m. opening candle, okay, and these targets came out 5 minutes ahead of the open. So we retraced, as we would expect, up to the BBC because the step line crossed. We hit the zone and the BBC. Now the zone is 59.26/27. We consolidated sideways for a couple hours. And then we got a leg and a retracement, and the pullback held. And then we got a big leg that took us all the way up to the bullish cross, or the bearish cross. When the red line gets below the green line, that's a bearish cross. When the blue line gets above the green line, that's a bullish cross. Now, when you have a bearish cross that leads to an extended move, the first time price revisits that area, as it did here, will almost always be resistance first time up. It sent price all the way back to the BVC, the pullback held, and then we made a run all the way up to the zone that was published Monday morning at 6:15 a.m. Eastern, and that's where we have a little double top resistance on the day. Step line is looking like it wants to lean right and cross blue and climbing. If that happens, if we continue to consolidate sideways here, we'll probably see a retracement or an attempt to retrace back to the BBC. Just like when the step line crosses red and falling, you expect a retracement to the BBC. Stands for bull bear cross. When price gets above the green line, we're bullish and expect higher prices. When price gets below the green line, we're bearish and expect lower prices. Above the green line, higher prices. So in creating this bullish cross right here, now this probably won't happen today, but when the markets open Sunday night, be very much aware that you've got this bullish cross just above the weekly zone. The alerts that go out on Sunday night are based on this week's zones because the new zones don't come out till Monday morning. Now the ES looks like it's going to take one more run at this zone. If it's able to break through, you've got potential resistance there, and potential resistance there, and potential resistance there. The more likely scenario, I would think, is that we get a cross right here. Step line will get on the right side of blue and climbing, and we'll get a retracement back to the BBC. There are a number of areas on the way down where the market could find support. Mostly this area right here, because this low is basically aligned with the BBC. And because of the way the market opened, even though we were below the BBC, we had blue and climbing, which is bullish. So we would have had to break through blue and climbing before we envisioned a trade down to the short target. So it was up, up, and away, pretty much across the board. Here's the Dow. This is where we opened. We ran up to the BBC, consolidated for quite a few hours. We got a leg, we got a retracement, then we got a leg that took us right up to this bearish cross. Resistance will always send the market looking for support. The pullback to the BBC held, although it did spike down and touch the zone at 42,760/65. And then we caught another rally, but we didn't quite make it up all the way to the zone. Came close, came within 15 ticks. On the Russell, here's where we opened. Price trapped between blue and climbing and the BBC. We consolidated sideways, and at about 9 o'clock this morning, it looked like we were going to make a run. But if you look left, you'll see there's potential resistance here. This high, became that high. So another retracement, and then a leg that took us all the way up to the target and to the zone. We spiked the zone by a bit and then retraced in that same 30-minute candle all the way back. Now we got a fresh leg that has taken us slightly above this high from yesterday. Notice that the step line is starting to hook to the right. On the way up, you had the perfect stack: price, step line, blue and climbing. But once that step line crosses to the right side of blue and climbing, you should anticipate a retracement to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Again, it just stands for bull bear cross. When price crosses above the green line, we expect higher prices. When price crosses below the green line, we expect lower prices. It's pretty simple. The NQ. Here's where we opened last night. Again, we had blue and climbing, so that took us through the BBC right up to the zone resistance, which sent us back to the BBC support, which sent us back to the zone resistance, back to the BBC support, and then we caught a leg that took us all the way up to the long target and exceeded it. You'll notice if you look at the horizontal line on the cursor, this high is this high. That's market structure. That resistance sent us not back to the BBC, but it sent us to blue and climbing, which can be good support, as it was right here. And then an attempt to get to the zone overhead, and we made it as far as yesterday's high. That high was 21,490. This high was 21,492. So, as you know, on the NQ, 2 points is pretty much nothing, okay? And when we have a slightly higher high or a slightly lower low on the 30-minute chart, we're always suspicious until price proves itself. So we're just kind of consolidating sideways. The step line is directly above blue and climbing. That's an indication that it's trying to cross, and we will if we continue to consolidate sideways, at which point price will then attempt to retrace back to the BBC. Crude oil. Here's where we opened last night. We were above the BBC. We made a run to the zone, consolidated at the zone, hit the target, which was based on this high right here. That sent us back to the zone. Then we caught a little bounce. Then blue and climbing, you see, turned to red and falling. Now we got to start thinking about potentially lower prices. We get below the BBC, we get a leg and a retracement and a leg, and there we are at the short target. We consolidated there for quite a few hours. Then we managed to get back above the BBC, accompanied by blue and climbing. So this time the pullback, while it held here, found support at the step line. With the assistance of blue and climbing, we managed to push all the way up to the zone and then the target. Again, that's the second time we hit the long target. And we've continued higher. And that is, I think, the highest weekly zone for crude. Let me take a peek. Yep, 73.30/35. So we just may close above the highest weekly zone on crude for the week. But as you can see, the step line is trying to retrace. Now, based on the last 15 years of the weekly trading zones, we would expect that by close of business today, price would be at or below the highest weekly zone. But over the last 15 years, there have been a handful of weeks where we close above the highest zone or below the lowest zone. And I think this is going to be one of those weeks. The big kicker is the fact that Biden sold off all of our crude stockpiles. And so, when there's less supply, price goes up. Gold. This was the open on gold last night. We ran up to the target, got a little retracement, put in a higher high up at 26.81. Now, is that the highest? No, there's still one more zone. Way up there, 27.09. Now, if you scroll way left, you'll find the reason that price stopped climbing right here. Once we got back below the BBC, we made a beeline for the weekly zone, which is 26.64/65, and the low of that candle is 64.3. So again, when price drops to a zone, we expect support until proven otherwise. That sent us up to the BBC resistance, and that sent us back down to the short target support, or that sent us to the short target. We had a leg and a retracement, a leg and a retracement, and a leg. Price rarely travels in a straight line. After the fact, it looks like it may have traveled in a straight line. But when you watch the candles building, it's not a straight line. It's back and forth, back and forth. Notice the step line here is about to cross red and falling. What does that tell us? To expect a rally up to the BBC. Then the question becomes, does the pullback hold? Just above the BBC, you've got the weekly zone. So you've got an area right here where the market will potentially find resistance. That's resistance times 2. We got 2 reasons for the market to find resistance. Silver. This was the opening candle last night. We're above the BBC, so we do anticipate higher prices. And there we go, right up to the long target. And again, everyone, all members and trial members, had these targets 5 minutes before the market opened last night. So from resistance, we go back to support. Pullback held, pullback held, and we made another run to the target. We spiked the zone, pulled back to blue and climbing, and then we had a leg and a retracement and a leg. Now this is a little unusual. The step line crossed, but price was determined to get to that zone overhead, 30.31/30.32. We spiked it. Again, if you scroll left, you'll see why price ran into resistance there. It's all based on market structure. That resistance sent us back to the BBC, the pullback held, sent us up to red and falling and the zone. See, that's resistance times 2. And what did that do? That sent price back to the BBC, and with red and falling overhead, the pullback here didn't hold. Took us back to the zone, and most likely the top of this long target will now become support, at least the first touch. So maybe look for a green candle that takes us back to the BBC or close, and then with red and falling overhead, we'll probably continue down. So that covers all the markets. Again, on the daily, price is still attempting to overcome red and falling and the step line. Now it looks very bullish right now. We're just slightly off the high of the day. The next major obstacle overhead is the 24% fib extension. Okay, it's time for Michael. He'll be here in a minute. If you want to become a member, send an email right here to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. We won't call you because we don't have a sales department or a phone room. We will send you an email that explains everything it means to become a passport holder. And there'll be a link that you can click to become a passport holder. Once you do that, Valerie will send you an email filled with information. Some of you will understand right away, some of it you won't. File those emails away in a folder somewhere because you will need that information. If you lose it or accidentally delete it, don't worry, we can send it to you again. But if you're trading in the middle of the night, it's nice to know where that stuff's at. As a passport holder, you'll get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them. So we've plugged that hole. 2 hours every trading day. On top of that, you get access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets, all time frames. Future stocks, crypto, Forex, ETF, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're posted each evening. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop every Thursday night. You also get the golden key that unlocks all the private channels and Telegram. One of those channels is the members-only workshop channel. Each Thursday night, when we complete the weekly workshop, we render it and then we put it in the weekly workshop channel. That is one of those private channels that once you become a passport holder, you will have access to. There's hundreds of weekly workshops in that channel. Do you need to watch them all? No. Just show up every day, pay attention, ask lots of questions, do the work, trade and sim till you qualify to go live, and the rest will take care of itself. Michael is here to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on TradingView, and then I'll come back and wrap things up with our good word for the day.
Oops. Whoa, I was talking. Excellent. Okay.
Yeah.
So you should be able to see my screens just fine right now.
Yeah. Everything looks good.
Good. Here we go. Good afternoon, everyone. Happy Friday. Today is the 3rd day of January, 2025. Wow. Well, if you have not taken a free trial and you'd like to take a free trial with us, then all you need to do is go to mytradingiq.com, and right here on the home page, click on the purple button right here. All right, there's no credit card required for the trial. Just click on that purple button. It's going to bring you to this page, which I created today, and set you up for all of next week. Okay, Monday, Tuesday, Wednesday, Thursday, Friday. That all looks right. Password looks right. Okay. Just fill out this form. Use your first name, last name, email, phone number. Down here at the bottom, fill out the multiple choice questions, honestly, if you will, because if you fill them out wrong, then you may or may not get any email or response at all. Down here on the bottom, if you have NinjaTrader, give us your machine ID if you want to use Ninja Charts. If you're not going to use Ninja Charts, then don't bother with the machine ID. Right? If you use TradingView, give us your login ID for TradingView. We don't need your password, just your login ID. If you don't have a TradingView login ID, you're going to want to get one. All right, TradingView offers a 30-day free trial. Go here to mytradingiq.com, click on Trading Platforms, and right here, click on this. All right, you can watch this video. This video is a couple years old now. It's actually made in 2002, I believe, 2022. But this link right here is still valid. Click on that link, and click on that link. It's going to bring you to this page. Click to monthly, non-professional monthly, and the essential will get you all you need. All right, for $14.95 a month. It's actually free for the first month. You're going to want to get real-time data from them. That is $7 a month that you're going to have to pay. You can do it on. You can watch it on delayed data, but you're not going to be able to keep up with me in the room. All right. Spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom, and I did put them down there again. See all that? It somehow were written them a couple days ago. Today, the 3rd day of January 2025, we made 336 ticks on the NQ, 0 ticks on the Russell, minus 15 ticks on the gold, and 33 ticks on the ES. What is it? 1942.5 on the morning session with 1 contract. All right. Today it took 3 minutes again. It took 3 minutes and 1 trade to get to the goal for the day. At that point, it was up $2,400, and I took a total of 35 trades today. All right. So on the month now, we're at $4,700 over 2 business days, averaging $2,350 per contract per 2-hour business day. Now, I expect that this year, using the divergence trades that we're doing right now, that this average number is going to be way higher than it was typically last year. I think overall last year, we averaged $535 per day last year. I think it's going to be a lot higher than that. Now, in 2022, our best year on record, we made $235,000 per contract, I think, or $238, something like that per contract. Because the markets were just wild, and we had switched. We added the NQ that year, and we had switched from a smaller time frame to a larger time frame. Well, this year, toward the end of last year, anyway, in September, we actually went to a little bit bigger time frame in a couple of things, and so that part of it, that part of the increase is going to start to show. But the beginning of this year and toward the middle of December last year, we also added in the divergence trade setup, which is going to be the primary trade setup that we're going to be using. And you can see where we added it in, right? Pretty simple to see that right in there, where we added it in. And I wanted this day right here, which was yesterday, the first day of 2025, to be better than any day we had in all of 2024. And the best day we had in 2024 was right there, just last week, a week and a half ago. Anyway, so I'm suggesting that you guys, if you're not doing this stuff, you should really get involved. Okay, if you're not involved yet, you should really get involved. Again, to do that, go here to mytradingiq.com on the homepage. Click on the purple button right there. All right. So did I go through all this stuff? I think I did, right? They're $4,700, 2 days in, averaging $2,350 per day. This is all the same. For the month of January, all this is going to be the same as this. All right. So we're now going 2 days this year, getting our goal, 17 days since our last non-green day, and 411 business days since our last red day. Okay. All right. Let's get into the trades. Now, we didn't trade too much on gold or the Russell today. It was primarily the ES and the NQ again. You see I changed this to yellow down here. I'm trying a different color in here because the issue was that people weren't able to see the black very well. But now I'm afraid they're not going to be able to see the yellow very well. So I'm playing with different colors to see what I can make, maybe even different opacities of the different colors. Because you can still see the black pretty well if I make it like 70 something. Okay? Now this place is here, we won't be able to see the black at all. Let's keep it down closer to 65. Yeah, you can still see the black in through the yellow right there. That's what I was trying to get to, was you could see the yellow. And you don't really even need to have the cover on there once you know what you're looking for. You can take the cover off of there. Okay, it is kind of neat to see the cover so you can see when it's coming out by itself. But you don't really need to have that on there. You can see it without it down there. And I don't know, you guys give me your feedback on this and tell me what you think. Okay, cover, no cover, yellow, orange, blue, green, pink. Happy New Year, Kevin. You guys tell me what you think. All right. All right. So on the gold today, what did we end up with on gold? We ended up with minus 15. Okay, so we had to stop out on our very first trade. We stopped out minus 15. Then we made 15 on this trade, and then we stopped out again on that trade. So we went from minus 15 back to 0, back to minus 15. That was our day in gold. Now, looking at the different setups that we had today, did I mark them all up? I tried to mark up the setups as they came. There was one right here. There weren't a lot today on the gold. There was one right here and one right here. All right, those are the actual trade bars. So you would have bought the open of that bar, would have bought the open of that bar. And right here, you would have sold the open of this bar. Would have sold the open of that bar right there. Those are all the trades that were on gold today. Oh, actually, yes, there were a couple more. There was one right here. You would have bought the open of that bar. And without even looking at price, you look down here and see where the trades were and what you should have done. Right? That was pretty much it. I guess right here you would have had one more buy of the open of this bar. Right there. And right here sold the open of that bar. Okay. That's what you would have had. So you would have sold the open of this bar, which would have stopped you out. You would have bought the open of that bar, which also would have stopped you out. You would have sold the open of that bar, which would have given you profit. Bought the open of that bar, giving you profit. Bought the open of that bar, giving you profit. Bought the open of that bar, giving you profit. Bought the open of that bar, giving you profit. Bought the open of that bar, giving you profit. I don't even know why I got into this trade. Oh, it was this right here. All right. So I did buy the open of that bar and it stopped me out. In here, I should have sold the open of this bar right here and gotten profit. And I sold the open of this bar and it stopped me out. That would have been a stop out. That would have been profit. That would have been break even. And this is still working itself out right now. And that was gold today. Gold. I think yellow is horrible. I don't know. I was thinking black and yellow usually pretty easy to discern, but I don't know. Yellow's probably not good. It's probably not good. I go back to blue. Maybe a different blue. Maybe that blue. Or that blue. That blue. Or that blue. Yeah, that's not a bad blue. So I think I was using this blue. Can't really see the black in it. That one's okay. See, feedback. That's what I want. See how easy it is to change. I don't even know which one I changed it to. Which one did I change it to? Oops. This one. Okay, so we'll get into the Russell now. That one. Okay, so the Russell trades, I clearly did not mark all the Russell trades, but I did mark some of them. There was one right here that was a long. Now, I don't know why. I guess I did. Okay, I shorted this. I got minus 15 when I shorted that. And then actually got minus 20 when I shorted that. And I don't know why I have, oh, because of this right here, right? So that was a long trade from the open of that bar. A long trade from the open of this bar that would have stopped you out. A short trade from the open of that bar where we would have gotten some profit. Going through it all, a short trade from the open of this bar where we did get some profit. I guess we went from 20, we got 15 ticks on that because it brought us to minus 5. Then we had a break even, and then this was a really long trade right here that we took that ended up giving us 5 ticks. I thought we were going to stop out on. We ended up getting 5 ticks on that. And toward the end of the session, there was a trade right here. The open of that bar would have been a short. That would have worked out. The open of this bar would have been a short. That would have worked out. The open of this bar would have been a short. That would have worked out. The open of this bar right here would have been a long. That would not have worked out, but I think you still would have been the short from the other one. And the open of this bar right here would have been a long. That would not have worked out. The open of this right here would have been a short. That you'd still be in right now. You'd be sweating right now. And that was it for the Russell today. We ended up with 0 on the Russell. We got back to 0. The ES. Keep doing that. The ES. Let's go there, like that. Okay, on the ES now. Let's go back to the beginning. Back to the beginning. See, all these lines in here were trades on the ES. So I'm not going to go through every single trade because there are just a ton of them. But we will go to the ones that we did do. Now, we missed that, was a long. We missed that, was a short. We missed that, was a long. We missed that, was a long. That was a long. That was a short. That was a short. That was a short. That was a long. That was a short. This is the first one we did right here on the ES. And we picked up 4 ticks on the first one, 2 ticks over here on the second one. Then we had a break even. Then we picked up 4 ticks on the third one to get us to 10. Then 2 ticks on the fourth one to get us to 12. And then we stopped out. And that put us back down to 2. Right. Then we had a break even. Then we had 13 ticks there that got us to 15. Then 4 ticks here got us to 19. Then 6 ticks there got us to 25. Excuse me. Break even, then 7 ticks there got us to 32. And 1 tick there got us to 33. And that is where we ended up with the ES. Now, during the break, during the break, there was a short here at the open. Short here at the open, sorry. A long right here at the open would have worked out. A short right here at the open, that would not have worked out. A long right there at the open would have worked out. A short right there at the open would not have worked out. A long right there at the open would not have. A short right there. Now, wow, there's some rough trading here during the afternoon session on the ES. When you get into a trending period like this where the legs are longer, it tends to not work as well. In those cases, the black line leading tends to work out better. Okay, when you start to get into a trending market that's got decent leg lengths like that, the black line leading tends to work out better, right? Because it would have been a couple of stop outs, like 3 or 4 stop outs right through there. And right here, there would have been another long trade on this bar that would have finally worked out. A short trade on this one that wouldn't have. A short trade on this one that would have. And a short trade right here that would have been 5 or 6 ticks. So the S was kind of tough to trade in there today. Now, it wasn't that tough early on, though. It was easy early on. It wasn't until it started actually trending that it got messy. That it got more difficult to trade. But in here, buying the open right there worked out well. We'd been buying the open there, that didn't. Selling the open there, that didn't work out. Selling the open here worked out. Selling the open here worked out. Buying the open here, right there. It would have been very close to a stop out to the tick. But this morning worked out a little better in the afternoon session. All this chop right here, you should be working out pretty well with all the chop. Usually works well in chop. But anyway, that is all of that for the yes. Now the NQ we still have on black and yellow. Now what do you think of this blue? Is this blue okay? Wasn't it this one right here? Yeah, that one. That looks tolerable, doesn't it? Is it possible to do a replay of the day so you would run a time frame in sim mode and then you could make trades on that time frame? Kevin, it's possible, but not with range bars. You can't do it with range bars. Okay, you can record. You can make a recording of the day and go back and say what you would do when the markets were moving around. But you can't do replay with range bars. TradingView actually has a really good replay feature, but it doesn't work at all with range bars. If you were to go to a minute bar, like we'll go to a 2-minute bar like this, okay, and you hit replay right here, you can go back to right here, and now I can say I want it to play 3 times the normal speed, and so in here you can see what's going on, and you can stop it, pause it, and say okay, maybe not 3 times, maybe 1 time the normal speed. So this is the normal speed of the bars. Okay, so like right there, you would have sold the open of the bar, and right here you would have bought the open of the next bar, and right here you would have sold the open of that bar, and right here you would have bought the open of that bar. And so you can do a replay like that, but you can't do it with range bars. Okay, you can do it, but you can't do it with range bars. It's got a really nice replay feature for the regular time frame bars. Okay, but we don't use those. If you're trading, if you wanted to look at something, and that was something that I went over this morning, if you wanted to look at things that are on like a 2-minute time frame, it's the same kind of thing. It's just your stop's going to be different. It's going to be different on every trade. Like right here, you would have sold the open of the next bar. So you would have sold the open of that bar right there. Now, where's your stop going to be? Is it going to be above this bar? Or is it going to be above this bar? I don't know. I'd say probably above that bar. So your stop's pretty huge. Your initial target's going to be down here. So you have to calculate the difference between your entry point, which is going to be right here, your stop, which is going to be up here, and your target, which is going to be down here, to see if it's even worth taking the trade. Okay. Move over a little bit further. Right here, you would have bought the open of the next bar. So you would have bought the open of this bar. So where's your stop going to be? Below this bar? Because right now you don't know that this bar is doing this. All you know is that it opened up right here. Right. So is your stop going to be right below this bar, or is it going to be below this bar? If it's going to be below that bar, you got to do the risk analysis, risk reward, and say, okay, well, I'm expecting it to get up to this level. My stop's going to be down below this level. Is the risk reward worth it? You can use this stuff on range bars. You can use it on minute bars. You can use it on any kind of bar you want. It still works the same. When it's oversold, you buy the open of the next bar. So in here, you'd buy the open of this bar. You'd anticipate it's going to move up to there. It did eventually move up to there, way over here. It moved up to there 24 minutes later. Right here, you'd sell the open of that bar, anticipating it's going to move down to there. Right, you got most of the way down there. Most of the way, not quite all the way. But see, so you can do it using that. And I mean, I showed today, with like Apple stock, I think was one I looked at today. You can do the same thing with this. Now, if you do this, put it on 100 range, that means every bar is $1, right? So every bar is $1 in here. And you're looking at the same thing. You get into the overbought, you're going to sell the open of the next bar. You get into the oversold, like this one right here, you're going to buy the open of the next bar. That one wouldn't have worked out. Buy the open of the next bar right there. That worked out okay. Right here, sell the open of the next bar. It ended up working out for $1. This is how you can do it with equities. With equities, every move up and down, every tick up and down with a range bar is 1 cent. So 100 range is a $1 bar. A 200 range is a $2 bar. And depending on how much volatility you have in the market, like a 500 range, you can have like 1 bar a day, something like that, a couple bars a day maybe. Like some days, like right here, we went from the 6th of September to the 11th of September. So there was some pretty flat time in between there, between the 6th of September and the 11th of September, right there. I don't know if it was a holiday or something, but see, like today, we're still on this bar that started yesterday. So it started yesterday. This bar started yesterday. We're still on this bar. We haven't moved from this bar. So Apple hasn't moved $5 in range in the last 2 days. Okay, but if you go to a $1 range, you see there's plenty of trades in here on today. Well, not plenty, but there's one right there, one right there, one right there. 3 trades today. One long right there that worked out, one short right here that worked out, and one long right here that worked out. You see what I mean? So let's go back to the NQ, and we'll look for all these NQ trades because I have a ton of them. Okay, and we'll go to the NQ on the 31 range. Almost scares me when it catches up like that. What the heck? Those aren't mine. Okay, so here's the NQ. This was our first trade of the morning right here. We picked up 48 ticks on the NQ right there. Then picked up another 48 right there to get us to 96. Then we stopped out, put us down to 60. Then picked up another 48 to get us to 108. Then we stopped out to get us to 72. Then we picked up another 48 to get us to 120. Break even. Stop out to get us to 84. Then we didn't do anything in here for a little while. Then we had a gain right here. We went from 84 to 97. Then went from 97 to 145, 145 to 157, 157 down to 121, 121 to 169, break even, then 169 to 217, then 217 to 225, then 225 to 229, 229 to 240, 240 to 288, and then 288 to 336. Those were our trades this morning. So the NQ was pretty good, and I missed a ton of trades in the NQ. Good trades, bad trades. I missed a ton of them in the NQ. This whole period in here where I didn't mark anything up, I don't know what I was doing, but I didn't mark anything in here. And you can see if we just start at the beginning where I didn't mark anything, right through here, there was a long trade right here at the open of that bar that worked fine. A short trade at the open of this bar that worked fine. A short trade at the open of this bar that ended up working out. A short trade at the open of this bar that, even though it pulled back 30 ticks, it still ended up working out. A long trade at the open of this bar that looks like it would have been a break even. A short trade at the open of this bar. A short trade at the open of that bar would have stopped. A long trade at the open of that bar would have been good. A short trade at the open of that bar would have been good. Long trade at the open of that bar would have been good. A short trade at the open of that bar would have stopped. Long trade at the open of that bar would have been good. Short trade at the open of that bar, good. Long trade here at the open of that bar, good. Short trade at the open of that bar, good. These are all the trades that I missed. I don't know what I was doing. And that's only 12 minutes. There are just so many opportunities with this. You should be able to get in there, get your goal for the day, and quit trading early. Short trade here was good. A short trade here was good. A long trade here was not. It went 36 into profit before it turned down, so that was okay. A long trade here, that would have been a break even because it went up that way before it turned down. A short trade here would have been fine. A short trade here would have been fine. You guys see all this? I mean, I don't need to go through every single trade with you. The trades that I took, there was a long here, a short there, a long there, a short there, a short there, a short there, a long there, and a long there. I'll just go to the end and start trading now. Okay, what we need is for the blue to get into the oversold by itself, or get into the overbought or the oversold by itself, one or the other. Okay, now I took the cover off. That was there. It was kind of a crutch for everybody who was just getting used to seeing it for the first time. There's a trade here on the gold right now. Okay, right here at the open of this bar was the short on gold. It should have been short from right here at 54.7. 54.7. I'm short from 54.5. Okay. That was a valid trade in there. Now, after it goes 5 ticks in profit, it's got to get down to right here. 5 ticks in profit. Now I'll bump my stop to break even right there. Stop goes to break even. And now we'll let it play out. The minimum that it should do is get down to 53.1 right here. That's the minimum that this trade should do right now. Okay, if it gets there, that's 14 ticks. Or for me, 1,400 bucks. Every tick is 100 bucks for me with 10 contracts on. Okay. And nothing else is given a trade here right at the moment. So that's what we're looking for right there. Locking just one tick on that. See the number down here? Did you see that number? It'll show again in a second. There it is. That's where it's trying to go to. I'll move that down. I'm going to lock in a little bit more on this. Times it's 122, so I have 8 minutes left. If anybody has any questions, please feel free to ask them right now. 10 ticks. 11. It looks like it's going to go further. I'm going to go all the way down here. Okay, it looks like it's probably going to go for the low of the day. We're out with 10. I think we got 10. But you see how easy that was, right? This got into the overbought. I sold the open of the next bar. Easy. Do I see the picture you sent? Kyle, are you in here right now? EFGHIJK. Nope, Kyle's not in here. All right, so over here you can see that the black and the blue led together and together here, so there's no trade in either one of those. This did get down to the prior swing low, almost to 53.1. Almost got down there, but we took 10 ticks out of that, so I'm happy with 10 ticks anytime we can take it. All right, you know, I haven't looked at the other markets in a while, and I don't think I've looked at the other markets with all this stuff. I haven't. Let's look at Bitcoin with this on a daily. Okay. Click on Bitcoin, we'll look at the daily, and let's get rid of this. All right. So what we were looking at before was just coming out of the overbought or oversold with the ribbon. So in here, we came out of the oversold with the ribbon. You would have waited until that bar closed. It would have had been an up close. That was a down close, actually, so you wouldn't have done anything there. You would wait for this one to give the up close right up there. But what if we do this? What if we change this? And this has got the wrong version on there. Let me update that to the latest version. Okay, and then we add the ultimate slingshot down here, and we flip the ultimate slingshot up on top of it like that. So instead of waiting for the up close right here, you would have bought right here, the close of this bar you would have bought. Instead of waiting for it to come out of the oversold, this to come out of the oversold, let me just fix the slingshot here so it doesn't screw things up. Okay. Instead of waiting for this to come out of the oversold, you would have just bought it right here. Right? Instead of waiting for it to come out of the oversold, which would have been right there. Or actually right up there. Over here, you would have just bought this. You bought the open of this bar right here. Okay, you would have sold the open of this bar right here. You would have sold the open of that bar. You would have sold the open of that bar. You would have bought the open of this bar. You would have bought the open of this bar. See, the same stuff works across all markets. You don't even need the context on here. Right? You don't need any of that stuff. You can get rid of all the drawings that we have on here. You don't need any of that. In here, you would have sold the open of this bar right here for that move down. Pretty simple stuff, right? So let's see what it looks like with the other markets. That was this one. Now we'll go out here. Well, one more and see what's out here. Silver. All right. Let's see what it looks like on silver. This is silver on a 9 range bar. So if we add the ultimate slingshot, move it up. Get rid of the context. So right here, you would have bought the open of this bar. That move up. You would have sold the open of this bar for that move down. You would have sold the open of that bar for that move down. You would have bought the open of this bar for a stop out. See, it's all the same stuff. You would have bought the open of that bar for the move up. You would have bought the open of that bar for that eventual move up. It's all the same stuff over and over again. No, Mark, it's not on Ninja. It's not going to be on Ninja. Neither of these are on Ninja, as a matter of fact. The ultimate slingshot's not on Ninja, and neither is the range trigger. I'm not putting any of the TV trade stuff on Ninja. Right? Ninja has kind of a hold over everything that you put on there. They can just come out one day and say, oh, you know what? We don't like the way that you advertise. Bam, you're gone. And that's how they work. So, you know, if you trade with Ninja, then you trade with Ninja, and that's fine. If you use our charts on Ninja, then that's good too, because when we set people up on Ninja, we set them up for like decades before they expire. So if Ninja does what they did last year at this time, they just removed our access to everything. And so we couldn't, anybody that got a new computer and their machine ID had changed, we couldn't change a thing for them. So I don't want to be in that. I don't want to be in that position ever again. So they sort of did it to themselves, in my opinion. All right, so we'll put the ultimate slingshot down here with this. Okay, and we'll just look at this. I haven't looked at the YM with all this stuff, really. So let's just look at the YM with it. If we move to the existing pane above, you would have been selling the open of this bar. You would have been buying the open of that bar. That wouldn't have worked out. You would have been selling the open of that bar. That would have worked out just fine. You would have been selling the open of that bar. That would have worked out okay. Selling the open of that bar would have been okay. Buying the open of this bar. Pulled back quite a bit, but it worked out eventually. Selling the open of this bar right here would have worked out. Selling the open of that bar would have worked out. Buying the open of that bar would have worked out. Selling the open of that bar. Selling the open of that bar. So, was it you, Mark, who had asked me, or was it was Daniel who had asked me today why I used the Russell instead of the YM? It was just that I had a good streak and then I had a bad streak on the YM, so I just switched over to the Russell. The Russell's been pretty consistent. I'm not giving as many trades, but pretty consistent. But that's what it looks like on the YM. Okay, and this last one, let's look at one more thing here. Let's see. We go out to 8. 8 should be XRP. Now I haven't looked at XRP on this either. I haven't really been paying attention to XRP lately. We had this run up here on XRP earlier, up to 288, and now it backed all the way back down to $2 and went back up. That's pretty good. That's good price action. But on this, if we were to put the ultimate slingshot down there in the bottom. Oh crap, I didn't realize I ran over my time. Sorry. Let me make this quick. Put the ultimate slingshot down there in the bottom. With XRP, you would have been selling the open of that bar, selling the open of that bar, selling the open of that bar. We haven't had a lot of buying opportunities here on XRP. The last buying opportunity was back here in November. You can't even see it. That's on a daily. If you break it down to like an hourly, break it down to an hourly, then there'll be more buying opportunities. You can't really even see it in here, but been buying the open of that bar, buying back here the open of that bar, buying the open of that bar. There's more opportunity if you break it down to a smaller time frame from the daily. Anyway, why did they do that? Because they sent us an email and said we had to fill out this one form, and we all missed it. All three of us missed the one email. We didn't fill out the form, and they just yanked it out from under us, and they were done. They were ready to call it right there and say, too late, you missed it. You missed the opportunity. We're just going to remove your access to everything. And they did. And so, I was no longer able. Everybody, all the hundreds of people that we have on NinjaTrader, if they change computers, we weren't going to be able to give them indicators. If their machine ID changed, we weren't going to be able to update their indicators. So what I'm recommending is trade on TradingView charts. I mean, you can trade on NinjaTrader, place your trades on NinjaTrader, use them for your broker if you want to. If you like their DOM, you like whatever features they have. They do have a lot of bells and whistles. Do that if you already have an account with them, but don't chart with them, because we're not going to be able to guarantee charts with them, right? All right, well, I ran over my time a little bit, guys. It's Friday. I'm going to wrap it up. If you have not taken a free trial with us, I went through a whole bunch of different things here. I went through every trade that we took, and I went through a whole bunch of different things, and we took one profitable trade. So it was all good stuff. If you have not taken a free trial, go here to mytradingiq.com. Click on this purple button right here. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to the registration page. Fill out the registration page. All we ask for is your name, your email, your phone number. Fill out the multiple choice questions down here at the bottom. It's just saying, if you have Ninja and you want to use charts on Ninja, give us your machine ID. Otherwise, don't give us your machine ID. It doesn't matter. Give us your TradingView login ID. All right. You should get a TradingView login ID. If you don't have TradingView, go here to mytradingiq.com. Click on trading platforms. Click on this right here. That will bring you to this page right here. Get the essential. It's a 30-day free trial. You're going to have to get real-time data. Real-time data is not free. All right. It's not free. And don't try to go the back way and get the free charts and think you can pay for data and it'll be cheaper that way, because it's actually more expensive to get the free charts. And with that, you get actually a lot less with your charts. And then you get paid like $30 a month for the data. If you do it this way, you get the charts for $14.95 and the data is $7. So it's like $21, $22 to get the charts and the data. And the charts are free for the first month. So it doesn't cost you, it costs you $7. Right? That's the best way to do it. And they don't really encourage people taking the free version. The basic version is what they call it, the basic version of charts. And with the basic version, you get like one chart, you get 2 indicators, you get limited historical. I don't think you get any price alerts, maybe 1 price alert, maybe 1 technical alert. You get ads. You don't get volume profile. You don't get custom timeframes. You don't get custom range bars. You don't get multiple watch lists. You don't get bar replay. You don't get indicators on indicators. You don't get any of this stuff down here. And you only get a few of these things. So pay the $14.95. I mean, that's like a drive-through. It's less than a drive-through at Starbucks, but it's like a drive-through at McDonald's for 1. Anyway, I imagine, I don't know, I don't go to McDonald's, but That's it. All right. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am.
Excellent.
Okay, recap of the morning session.
3 minutes, one trade, 2,400.
Good job.
Yes.
Great way to end the week.
It was.
First week of the new year.
Nice start to the new year.
Yep. All right, guys, we're going to wrap it up with our good word for the day. Our topic is never stop learning. This is part 1. Mark 12:30. You shall love the Lord your God with all your mind. God has created us with the capacity to keep learning until the day we die, which is something we really shouldn't take for granted. The average brain weighs approximately 3 pounds. Yet neurologists approximate that we have the ability to learn something new every second of every minute of every hour of every day until the day we die. Pretty awesome, right? But it's more than that. It's an awesome obligation. Learning is an indulgence. It's a stewardship matter. Jesus said in Mark 12:30, you shall love the Lord your God with all your heart, with all your soul, with all your mind, and with all your strength. It's impossible to determine the percentage of our minds we use, but all of us have untapped potential. Your imagination is capable of considerably more than you can dream, yet somewhere along the way, most of us stop living out of imagination and start living out of memory. We stop designing the future and start copying the past. And that is the day we cease living and begin dying. Why? Because we stop educating ourselves. Loving God with all your mind requires maximizing your mind by learning as much as possible, about as much as possible. Reconcile yourself with the reality that God is not an object of comprehension as much as He is a source of wonder. And that sacred sense of wonder ignites a holy curiosity to keep learning more about the Creator and His creation. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.